Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, and setups can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. All right, here's my agenda for today, Monday, December 18th. First of all, I want to cover news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items, economic data, and events. I think there was some housing data out this morning, apparently better than expected. And then tomorrow, there's some there are some medium impact data coming out, 8:30 a.m. Eastern Time, building permits, housing starts. Then on Wednesday, consumer confidence, 10 a.m. And then on Thursday at 8:30 a.m. Eastern Time, GDP data and jobless claims come out. And then Friday, PCE data comes out. That is probably the most important data release for the week, as well as durable goods. So that's on Friday, PCE data and durable goods. All right, so overall, a pretty light week for economic data and events. All right, next, positional analysis. Let's start with the S&P 500. This is the ES futures and Bookmap. And before I take a closer look at this chart, I want to take a look at the underlying index. That's the SPX, S&P 500 index. And I'm going to start with a one-day chart, taking a look at a larger time frame. So this is a one-day chart for SPX. Note the rally that began on October 30th. The day before, that was a Monday. On Friday before, traders were loading up on puts, concerned about weekend risk. And as price started to rise on Monday, implied volatility dropped. That led to a huge IV collapse, put Vanna rally. Market makers' position on the gamma curve shifted from very negative to positive now. And price continues to move higher, up from around 4,100 all the way up to almost 4750. So a huge rally in a short period of time in SPX. All right, let's take a look now at a 30-day chart. This is the chart that I usually show. And this is showing the upper portion of that rally. And let's zoom in and focus on the levels on the chart. So again, this is SPX, a 30-day 1-hour chart. Focusing on the levels, first the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, updated once a week. Those levels will remain in place for the entire week. Next, the dashed blue lines are showing the lower and upper daily expected move. That's updated once a day. I update that once a day, also based on the options market. And note that SPX is now trading above its upper daily expected move, which was around 22.5 points, plus or minus 22.5 points. That's based on the close on Friday afternoon. The dark red lines are showing Spotgamma levels. These are proprietary Spotgamma levels that Spotgamma provides to their subscribers, shown on a variety of platforms. This is Thinkorswim. These levels are shown with the dark red lines. I'm going to point out the key daily levels. So Spotgamma takes the open interest data that's released once a day by the OCC, applies their own proprietary algorithms to come up with these levels. They're basically gamma-weighted open interest. First of all, here's the put wall at 4,500. That's the strike with the largest net negative gamma that can be expected to act as support. That level did move up from 4,400 on Friday. And the next level up is the volatility trigger at 46.95, and that is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility, leading to lower trading ranges and more mean reverting price action. And just above that level, at 4,700, is the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And then finally, the call wall at 4750. That's the strike with the largest net positive gamma that can be expected to act as resistance. So that is the potential ceiling for price. 4,500, the put wall being the potential floor, and 4,750 being the potential ceiling. So I mentioned the put wall moved higher from Friday. Also, the volatility trigger moved higher pretty substantially, up 100 points to 46.95. And finally, let's take a look at one other SPX chart just to get a close look at the levels that are in play for today. And this is showing about 2.5 days worth of data. So this is today in the dark portion on the right side here. This is price action for today. And note that SPX again is trading above its upper daily expected move. Let's just zoom on this chart just a little bit so we can see just above. There's the call wall at 47.50, and then there's a combo L1 level combining SPX and SPY gamma weighted open interest into one level, in this case converted to an SPX price. All right, let's go to Bookmap now. In Bookmap, I have my own cloud notes, so I can show these Spotgamma levels, SPX levels. There's the 47.50 call wall, and there's that combo level just above that. I'm also showing SPY levels on this chart. Here's the SPY large gamma 2 level, just right next to the ES upper daily expected move. There was some consolidation at that level earlier today. Also the SPY 471 level acting as support just after the cash open at 9:30 a.m. Eastern Time. So pretty narrow trading range today with a bullish bias. Price grinding higher in a positive gamma environment. All right, so those are the levels in play for the SPX ES today. And note there is a difference in price between ES and SPX. And today it is around 52 points. That's what I'm using. So ES minus SPX equals 52. So the 47.50 call wall SPX 47.50 is shown at ES 48.02. All right, let's take a look at NASDAQ now. So this is the NQ futures and Bookmap. And before I take a closer look at this chart, I do want to take a look first of all at QQQ levels, so we can isolate the QQQ levels in play for today. So for QQQ, this 405 level, that's an L3 level, one being the most important amount of gamma, 5 being the least important, so L3 in the middle acting as support this morning. And note that for QQQ the call wall is at 410. That is higher, that shifted higher from Friday. Also, I forgot to mention for SPY, the put wall shifted slightly lower, and also the absolute gamma strike shifted slightly lower to 470, so more in line with the SPX absolute gamma strike. And again for QQQ, the call wall now has shifted up to 410, moving that potential ceiling for price upper range up higher. All right, so those are the QQQ levels in play for today. Let's take a look at NDX. So NDX, here's the call wall absolute gamma strike at 16,650, acting as support. Price grinds higher. And for NDX, the absolute gamma strike and call wall shifted higher to that 650 level, and the put wall and the volatility trigger shifted lower. And for QQQ, again, the call wall shifted higher, and the volatility trigger also shifted higher. All right, let's take a look at Bookmap now. I'll go back to NQ futures. So just like the ES, I have my own cloud notes. So I can show NDX levels. There's that 650 level, absolute gamma strike, call wall, and that was a support level for good setup higher right at VWAP, and also the again the 650 level, and there's the QQQ 405 level acting as support earlier in the morning. All right, so those are the levels in play for NASDAQ. Again, the most important level really is this 650 level. That was the support level for a pullback and then a move higher. And that's the setup that we'll take a look at in a few minutes. All right, so those are the levels in play for the S&P 500 and NASDAQ. Now let's take a look at gamma notional to see how market makers were positioned on the gamma curve at the beginning of the day. So what I'm going to take a look at is market makers gamma notional for the S&P 500, NASDAQ, and Russell 2000. And I look at this information every day to get a sense of how market makers may react to changes in price and applied volatility, as well as an expected volatility and trading range for the day. Note all these numbers are positive, but mostly lower than on Friday as expected, with the large expiration on Friday, the December expiration, and a lot of call gamma expiring. So these numbers again are positive, but for the most part less positive than Friday, except for QQQ, which did increase slightly. So in a positive gamma environment, again, for an index, Spotgamma assumes that traders are short calls, market makers are long calls, and they have to trade futures against price to hedge their delta exposure. All right, let's take a look at the Vanna model to get a sense of, or a graphical representation of what that means. I'm going to start with SPX, and this chart is showing market makers delta notional, that's their delta exposure, on the vertical axis, and the spot price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers delta notional may change with changes in price only. And then the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and applied volatility. And that change in delta with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. And that's the curve that we want to take a look at, the purple curve. All right, let's check on prices now. SPX currently trading right around 47.44. So right about where I'm holding my cursor here with this vertical line. So this is indicating that if price continues to increase, market makers will need to sell futures to hedge their delta exposure, and that tends to subdue or decrease volatility. So right now SPX trading toward the bottom of the curve, but approaching the right portion of the curve, indicating market makers will need to sell futures to hedge their delta exposure as price increases. Let's take a look at SPY. SPY currently trading just above 472, also in a very similar portion on the Vanna model. And again, market makers will need to sell futures to hedge their delta exposure as spot price increases. Finally, let's take a look at QQQ. QQQ trading just above 407, also in an almost identical position on the Vanna curve there. All right, so my thesis for the day, was, first of all, looking for lower volatility. Although gamma notional did decrease from Friday, it's still positive. And so looking for more mean reverting price action, and then considering a directional bias. First of all, there's the seasonality to take into effect, and that is apparently what's happening today. And then also, it's also important to watch what options traders are doing during the day. So let's do that now. So this is the hero signal in Spotgamma Hero. Hero is hedging impact real-time options. So everything that we've looked at so far, other than Bookmap, has been based on static data that's updated once a day, sometime overnight. And that's what I use for my planning and positional analysis. And then now we're going to shift to real-time data. So what this chart is showing is price for SPX with a white line, and then the hero signal is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. And this is the chart that I typically look at if I'm trading any form of the S&P 500. Whether it again is ES futures or SPY shares, SPX options. This is the total picture. All right, let's zoom in on this chart. Oops. All right, I'm going to zoom in just a little bit here, and this is the cash open right here, 9:30 a.m. Eastern Time, and I'm just going to focus on one setup. And this is the setup just around 11 a.m., somewhere between 11 and 11:10. And before that, traders were taking negative delta positions. That's shown by the falling hero signal. And then note the sharp reversal on the hero signal just right around 11:10. As traders started taking positive delta positions, market makers were taking the opposite side, so they had to buy futures to hedge their delta exposure. And let's just take a closer look and see what they were doing. So I've separated out puts and calls, and notice initially they were buying calls, traders buying calls shown by the rising orange line, and just before 11:10, sorry about that, Spotgamma continues to work on this issue. And Khalid, you're welcome. All right, let's take a look at this again. Call signal levels off, then traders start aggressively buying calls again, shown by the rising orange line, and at the same time, for at least a short period of time, they stop buying puts shown by the falling blue line. So falling blue line indicates traders are buying puts, rising orange line indicates traders are buying calls, and notice for today they are buying calls and selling puts, and the call bars are more aggressive, primarily driving price today. All right, let's go take a look at Bookmap and look for that setup right around 11 a.m. and look for the clues in Bookmap. Zoom in on this just a bit. So just looking at the entry point, first of all, focusing on the volume dots. The volume dots are showing market buy minus sell, Magenta dots indicate more sellers than buyers. Green dots indicate more buyers than sellers. So note the shift in order flow here. A lot of aggressive buyers coming in. There were about 3 tests of VWAP, a very good entry point for a long. Aggressive buyers start to come in right at VWAP and expected a level that you would expect to act as support. And note there were a few iceberg orders, not very large, in fact pretty small, but I'm looking at the light blue line here in the subchart increasing, indicate that large traders were buying with iceberg orders, and there's one small order shown here, and then there's another one obscured by the stop orders on chart indicator. So traders, large traders, were buying with iceberg orders. They used to hide their size. Traders in the S&P 500 started buying calls again and stopped buying puts, and price moves higher. So traders, options traders, taking positive delta positions, and then a reversal higher at VWAP, and then aggressive buyers coming in. So pretty clear signal here in Bookmap. Zoom back out. And note that price was already making a series of higher lows from before 8 a.m. So really just a continuation of that uptrend. All right, so there's the long entry in S&P 500. Very similar setup in NASDAQ. Just looking at NASDAQ here, you can see the again the very similar setup. Magenta dots, aggressive sellers on the way down. Aggressive buyers start to come in at levels that you expect to act as support. First of all, VWAP, light blue line, as well as the 650 absolute gamma strike call wall that I have pointed out as before. Let's go take a look at Hero now to see what options traders are doing in NASDAQ. So here's the reversal right around 11:10. Initially, traders were taking negative delta positions, and they start taking positive delta positions. Price moves higher. Let's take a look at puts and calls. So at least for a short period of time, they start buying calls and stop buying puts. Price moves higher. Let's take a look at another signal. This is a combined signal for the stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. And this is very bullish. I posted this in Discord earlier today. So what this chart is showing is that traders and net for this combined signal were buying calls. For a while they started selling calls, then right around 11:10 they started buying calls again. Sorry about that. So right around 11:10 they started buying calls again, or stopped selling calls, and they continued to sell puts. So both the blue line and the orange line rising higher, moving in the same direction. That is a very powerful directional signal. So traders are back in the Mag 7 stocks. And these 7 stocks are a very large component of the NASDAQ as well as the S&P 500, and they typically will drive price action especially in the NASDAQ. So this is a very important signal to look at for the NASDAQ especially. All right, let's go back to Bookmap. All right, so to me, this was the most clear long entry point. Again, noticing the shift in order flow, magenta volume dots down to 650 in VWAP. Aggressive buyers start to come in. Traders are continuing to take positive delta positions in the Mag 7 stocks. And then as price starts to move higher, aggressive buyers continue to buy. That's shown by the rising cumulative volume delta, and also buy stop orders help to fuel the move higher. That's shown by the rising yellow line in the subchart, as well as these on-chart indicators, the small green dot. So buy stop orders and aggressive buyers shown here in Bookmap. So another pretty easy read for a long setup right there, right around 11 a.m. All right, let's take a look at some stocks now. And note the stocks that I keep in Bookmap and the stocks that I trade, mostly the Mag 7 stocks, as well as AMD and Netflix. These are stocks that have very liquid options markets, and they are price action is heavily driven by options trades and market maker hedging activity in these stocks. So I'm going to point out a few stocks today. First of all, Amazon. Very bullish day in Amazon. Let's go take a look at Hero, see what options traders have been doing in Amazon. So on Amazon, note the rising orange line, also the blue line, that is positive notional value. So they're buying calls, that's shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. That's a very powerful driver that can drive a stock price much higher. So if you're looking for a long entry, this is what you want to take a look at in a stock. And note that Amazon is trading above its call wall and key gamma strike. So D&T matter, I don't know if you're listening to this or not. So there you go. These calls concentrated at the call wall and key gamma strike, going further in the money. Delta is increasing, and market makers continue to have to buy stock to hedge their delta exposure. So traders are long calls, market makers are short calls, and that is what Spotgamma assumes for a stock. So market makers have to continue to buy stock to hedge their delta exposure. So there's Amazon. Let's go back to Bookmap. And note that 150 below is the call wall key gamma strike. Note all the green volume dots other than the opening print shown by that large magenta volume dot. After that, a lot of aggressive buyers as well as call buyers helping to drive price higher in Amazon. The next is Google. And a very strong day in Google. This is a lot of movement for Google. Usually Google is not much of a mover. Let's see what options traders are doing. Separate out puts and calls, And today, call buyers definitely driving price in Google. And note that 135 is the key gamma strike, 140 is the call wall up above. This is a very typical pattern. Aggressive call buyers in the morning. They take their foot off the gas, price consolidates. And that can happen anywhere from 10 a.m. to 1 p.m. So they took their foot off the gas, price consolidated just above the 135 key gamma strike. And then traders resumed buying calls, price moved higher, and then they took their foot off the gas again and price consolidates. Let's go take a look at Bookmap. So there's that first consolidation. Well, there's the first push up. Traders aggressively buying calls. Market makers selling the calls, buying stock. First consolidation, then that second leg up. And now price consolidating again as call buyers have taken their foot off the gas. Again, also note the green volume dots. There are a lot of aggressive buyers here just buying stock in Google. All right, the next is Meta. And bullish day in Meta as well. Let's see what options traders are doing. Zoom in on this chart. And for Meta, the put call picture is a little bit more mixed. So up until about 12:20, they were buying calls and selling puts. And note right around 12:20, traders, sorry about that, right around 12:20, traders started selling calls and stopped selling puts, started buying puts, and then price consolidates. And note that Meta is trading above its call wall. So again, those calls that are concentrated at the 340 level, Spotgamma assumes traders are long calls, market makers are short calls. As those calls go further in the money, their delta increases. Market makers have to continue to buy stock to hedge their delta exposure with that call wall breach. So let's go back to Bookmap. Zoom in on this just a little bit. So here's the 340 call wall. Let me tone down these volume dots just a little bit. Oops. So price breaks above the 340 level and then comes back and retests the level just above VWAP. Good entry point for a long pullback to that call wall. And price continues higher as traders take positive delta positions, and those calls at 340 go further in the money. All right, that's Meta. Let's take a look at Netflix. Very bullish morning, quick jump up in Netflix up to 490. Let's take a look at Hero, see what options traders are doing. So here's that, a great example of that typical pattern. Let's separate out puts and calls. Call buyers, very aggressive in the morning. And they take the foot off the gas pretty quickly, right around 10 a.m. Price consolidating, not doing much with puts. Initially they were selling puts, and now that line has leveled off. And there are a couple of ways to trade this. First of all, to catch the opening move, you'd have to be pretty fast. Buy a call spread, buy Netflix shares, and the way to play this consolidation is, now I would not necessarily buy a put, but buy a put spread or sell a call spread just above price, and all Netflix has to do is stay below that level. All right, next, NVIDIA. And bullish day here in NVIDIA. Note for NVIDIA, now trading above its 500 key gamma strike call wall. And calls definitely driving price higher. Note the flow alerts here, kind of a cluster of them, indicating significant options activity, very timely. So if you're watching flows, that would have been anywhere around when these flow alerts came in would have been a great entry point. So net for the day, traders are buying calls. That's definitely driving price, and also they are selling puts. It looks like large put seller came in right around 2 p.m. also buying calls at the same time. Could have been the same trader or traders selling puts and buying calls, and potentially selling the puts to pay for the calls. Let's go take a look at Bookmap. So remember, 500 is the call wall key gamma strike. Let's tone down those volume dots just a little bit. That level acted as resistance earlier today. Note all the liquidity at that level. This is the heat map and Bookmap. Shows a history of the limit orders in the order book, and the darker the color, the darker the shading, that indicates there more liquidity there. And price absorbed at that level twice today, acting as resistance. And then finally, aggressive traders consumed the resting limit orders at 500, and now NVIDIA is moving higher. So at least for today, it looks like the Mag 7 stocks are back for the most part. So very bullish day in NVIDIA, as well as traders buy calls. Market makers sell the calls, and they have to buy stock to hedge their delta exposure, And also now NVIDIA has also breached its call wall. Let's take a look at Tesla. And CWR Group says NVIDIA full breakout. Yeah, it's about time. So NVIDIA reported great earnings last month in November, and then consolidated for a while, and now is moving higher again. All right, so another story for Tesla here today. Let's see what options traders are doing. Zoom in first. So initially in the morning, traders were taking positive delta positions. Then right around 10:20, they shifted, started taking negative delta positions, and price moved lower. And let's see what they were doing. So initially in the morning, they were buying calls and selling puts, and then right around 10:20, they shifted, started selling calls, price moved lower, and then right around noon they stopped. Now price is consolidating. Let's go back to Bookmap. So here's that reversal. As traders started selling calls, buying calls initially, started selling calls. Order flow kind of interesting here. Magenta dots on the way up, and aggressive buyers on the way down. Pretty interesting. I find order flow for futures a little bit easier to read the volume dots. All right, speaking of futures, let's go back. All right, David Sharp asks, what does it mean to breach their call wall, a squeeze? So let's take a look at something. Go to let's take a look at Meta. Zoom in on this chart. This is the put and call impact chart in Meta. Zoom in on this. Let's just see where Meta is trading right now. Just under 347. So somewhere around here where I'm holding my cursor, that white line. So here's the call wall at 340. Meta trading above that level. So what this is showing, so first of all, for a stock, Spotgamma assumes that traders are long puts and or long calls. Market makers on the opposite side of that. So market makers are short puts and or short calls. Market makers always want to remain delta neutral. So this is the call wall. This is the strike with the largest call gamma, positive gamma for traders. So in this case, market makers are short those calls. As those calls go in the money, their delta is increasing, and they want to remain delta neutral, so they have to sell futures to hedge their delta exposure. As the delta of those calls goes further in the money, again, delta is increasing, and they have to continue to buy stock to hedge their delta exposure. So David, I hope that makes sense. We can take a look at something else here. Let's go to Thinkorswim. Let's take a look at Meta. Take a look at an options chain. So looking at delta, you can see as these strikes go further in the money, delta increases. Market makers want to remain delta neutral, so they have to continue to buy stock to hedge their delta exposure. This is a heat map for the S&P 500. So you can see the stocks driving price higher today. We looked at Amazon, Google, Meta, Nvidia. All right, David, I hope that helps. All right, let's, does anybody have any stocks they want me to take a look at? Otherwise, let's go back to the S&P 500, check on that. All right, since about 11 a.m., traders continue to take positive delta positions. Price is moving higher. All right, great. You're welcome, David. Check on NASDAQ. In the case of NASDAQ, traders are taking negative delta positions. Let's check MAG 7. And here's what is driving NASDAQ. Let's go back to Bookmap. S&P 500 continues to grind higher. And now here's a stop run up to 47.50. Note the sharp rise in the yellow line on the subchart, showing buy stop orders, and shown also by the on chart indicator. That is a stop run up to 47.50. Let's just check just confirm that price. That is SPX 47.50. Let's take a look at zoom in on this chart. So it looks like SPX stops for right now just short of that at 47.49.52. So just short of the 47.50 level. All right, Paul wants to take a look at Target. All right, Paul, I don't have Target in Bookmap, but we can take a look in Hero. See what options traders are doing. So target slightly lower. Traders are taking negative delta positions, shown by the negative notional value. So they're not doing much with puts. They're mainly selling calls today. All right, Paul, there you go. Anybody else? Any other stocks you want me to take a look at? Let's go back and check NASDAQ. NASDAQ continues to grind higher above its upper daily expected move. And just below the QQQ 408 level. As traders continue to take positive delta positions in the Mag 7 stocks. Let's just go back and take a look at that heat map and Bookmap. We'll check the NASDAQ. So all these stocks helping to drive the NASDAQ higher. Looks like out of the Mag 7, only Apple and Tesla are the stocks that are not really contributing, and Microsoft just slightly, but it is positive for the day. And so far this just slow mechanical grind higher continues. So last call for stocks. Does anyone have any stocks they want me to take a look at? I've got about another minute. Back to NVIDIA. Continues to move higher above its 500 call wall. Key gamma strike. Amazon continues to grind higher. Google consolidating a little bit. Let's check Meta. Meta's still trading well above its 340 call wall. All right, my time is up. I want to thank everyone for watching. And I will see you tomorrow. Thanks again. Remember, there's some building permits, housing starts data to tomorrow at 8:30 a.m. Kind of medium impact data, and we'll see if it has any impact on the market, and we'll also see if this Mag 7 rally continues tomorrow. All right, everyone. Thank you very much for watching. Thank you for your questions and comments, and I will see you tomorrow. Thanks again. Bye.